Good evening. This is the post-market recap by AGI Era. Today is Tuesday, January 13th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a battle between bulls and bears, with the bears gaining a slight edge by the close. The S&P 500 finished the day down 0.19%, settling at 6963.74. Technically, the index is now trading just below the psychological 7,000 mark, struggling to reclaim that key level and indicating a lack of strong conviction for a decisive upward move. The Nasdaq 100 also saw a dip, closing 0.18% lower at 25,741.953. The Dow Jones Industrial Average finished down by 398.21 points, a more significant decline of 0.8%. Crucially, trading volume today for the S&P 500 was 2.37 billion shares. While we don't have a precise average for direct comparison, this is a substantial volume, implying active trading and not a light session that might suggest a lack of conviction. This volume, coupled with the slight downturn, could indicate institutional rebalancing or profit-taking rather than a broad-based panic. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, data was not available from our Stook feed today. However, the broader market movements suggest a cautious sentiment. We are seeing a clear divergence in sector performance. Money flowed noticeably into utilities, is XLU, which gained 0.63%, while technology, XLK, lagged significantly, while closing down 0.21%. This rotation indicates that Wall Street is positioning for a more defensive stance, favoring stability and income-generating assets over high-growth tech, perhaps in anticipation of shifting economic winds or continued interest rate uncertainty. The macro engine room. The primary driver of today's moves can be traced back to the bond market, though specific 10-year Treasury yield data was not available from our Stook feed today. However, the broader narrative suggests a cautious tone. Meanwhile, the U.S. dollar index is up 0.32%, settling at 98.94. This strengthening dollar is significant because it directly creates a headwind for multinational corporations, making their exports more expensive and potentially impacting their earnings when repatriated. A stronger dollar can also put pressure on commodity prices, though crude oil is trading around $61.07, responding to its own supply-demand dynamics with a notable gain of 2.95% today, which could signal renewed inflationary pressures. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech. NVIDIA finished the day up 0.47% at 185.805. Microsoft closed down 1.36% at 470.67, while Apple finished up 0.31%. Managed a gain of 1.24%. The weakness in this group is notable, particularly for Microsoft and Amazon. Microsoft's drop is attributed to reports of reduced AI software sales quotas, suggesting weaker than expected demand and concerns over the high costs associated with building out AI data center infrastructure. Adding to this, Rothschild downgraded both Microsoft and Amazon to neutral, citing high AI spend and profit uncertainty. Similarly, Amazon closed down 1.57% at 242.60, with its decline also linked to the Rothschild downgrade, concerns about future AWS growth, the profitability of AI investments, and increased EU regulatory scrutiny. Meta also saw a significant drop of 1.69%, and Tesla was down 0.39%. This collective pressure on some of the Magnificent Seven highlights investor scrutiny on the immediate profitability and regulatory landscape surrounding massive AI investments. After hours and look ahead. Looking at the after hours tape right now, shares of Intel are moving significantly, up 1.97% after the bell, indicating some positive sentiment or news emerging for the chip maker. As we pivot to tomorrow, the calendar brings us a continued focus on economic data. Investors should specifically watch for any upcoming inflation reports or Federal Reserve commentary, which could further shape interest rate expectations and dictate market direction. The interplay between macro data and corporate earnings will remain a critical theme. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. This podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.